Oh, it won't let me share. Oh, it will. Will it let me share my Excel on here? All right, hopefully that's showing up in there. But so this is the problem for chapter 3, number 10. So they gave us a partial worksheet for Sam's delivery. And so they gave us, let's take that out. This is actually Sam's delivery. That might be different too, but anyways. All right, so Sam's delivery, this is our worksheet. They told us that these were all the accounts that we have. So just to make sure that I have all the accounts on here, because I was trying to type this rather quickly after doing it on paper. So just like, I'm going to call these out, but could double check, maybe read along in your book as I call them out to make sure I didn't miss anything. So we have cash, accounts receivable, office supplies, prepaid rent, delivery van, accumulated depreciation. On the van, we have equipment, accumulated depreciation on equipment, accounts payable, utilities payable, salaries payable, unearned revenue, common stock, dividends, delivery revenue, rent expense, salaries expense, supplies expense, utilities expense, depreciation expense on the van, and depreciation expense on equipment. Did I miss anything? Okay, I hope not. All right, so that ended up coming to $62,230, and they both balanced debits and credits. And then we brought in our adjustments, which they told us what those were. So our adjustments are listed here. Our adjustments should balance, and they do. So the next thing, what we're doing is we are creating the adjusted trial balance for these. So to do so, we're just simply, remember, cash is not affected when we are adjusting. We talked about that earlier. Remember, cash is not affected. So we're not going to change cash. Cash is going to remain what it is, and that's on page 135, by the way, the rules for cash. So this stays the same. Accounts receivable, we had a debit for $225. We started with a debit of $800. We had another debit of $225, so we're going to add those together, and that gives us $1,025 that we now have in our debit column. Does anybody have any questions, or I'm going to stop and let you tell me, is there anything on here that you had a question about while you were trying to perform this, or do you want me to just kind of walk through each of them, how I'm doing so far with the cash and accounts receivable? Okay, so I actually put formulas in here. So when you go in and if you want to rework this problem later for reference, or if you're working on your assessment and you want to use this, if you don't notice, I'm sure you do, I just copied this tab out of the assessment. I pulled it out of the assessment real quick, and I went in and I changed all the data, and then I went in and I added formulas to calculate everything quickly. So if you're looking at this and you don't know how in the world I came up with $200 for prepaid rent, you can click on it and it will show you. If you double click, it highlights all the columns that I'm looking at. So we had a debit. This is a debit on prepaid rent. And then if this was a debit amount, we would add it. And if it's a credit amount, we're subtracting it. So that's what it's saying here in this formula. You can also tell that by looking and saying, okay, well, we started with a debit of $1,000. We credited $800, and now we're left with $200. So however you want to do that. Another thing, you could also use a T account. T accounts are really helpful in this kind of situation, because what you would do is you would draw out the T account for prepaid rent. So you would have prepaid rent. And in prepaid rent, we had a debit for $1,000. And then we credited it for $800. So we're left with $200 debit. So that's another way for you to figure out how much and where on the adjusted trial balance it falls. Is it a debit or a credit? For the delivery van, we had a debit of $23,000 for the delivery van. That's going to stay the same because we had no adjustments on the delivery van. So we continue to have a debit for the delivery van here in our adjusted trial balance. Accumulated depreciation. So we started out, we had no depreciation. So based on that information, that tells me that we just got the van when we performed our unadjusted trial balance because we had no depreciation here. And then we adjusted for our depreciation. Depreciation took place within this period of $750. So on our adjusted trial balance, we're going to credit $750 for accumulated depreciation. Equipment, we started with $15,000. We had no adjustments, so it stays $15,000. Accumulated depreciation, we started with no accumulated depreciation. We adjusted for $300 in accumulated depreciation. So now we have a credit of $300 in our accumulated depreciation account. For accounts payable, we credit $800. That's what we started with. There were no adjustments, so it remains at $800 credit. Utilities payable, there were no adjustments, so it stays the same. Salaries payable, we started with nothing, but we had an adjustment for $875 as a credit. So we're going to credit our salaries payable account by $875. Unearned revenue, we started with $400. We're going to debit $130 in our adjustments. We have an adjustment for $130, so we're going to debit that. And that's going to leave us with a credit in our unearned revenue of $270. This type could be confusing and the reason I say that is because we started with a credit, but then we had an adjustment for a debit, and now we're ending in a credit. So this might be one that you might want to work in a T account first if you have something like this or similar to it. Some people do better in worksheets, writing it out in worksheets, and other people do better writing it out in their T accounts first and then just transferring those amounts. So whatever you prefer, as long as you get to the correct answer, you can do your T accounts first or your worksheet. And then common stock, we had a credit for common stock. There were no adjustments, so it stays the same throughout. Dividends, same thing, no adjustments. For delivery revenue or revenue, we started with $23,000. We had a credit of $355. So we're going to add that, and we're going to end with $23,355 as a credit. Rent expense. We started with $3,000 debit. We had an adjustment of an $800 debit. So we're going to add that together, and our adjusted balance is $3,800. Salaries expense, we started with $4,500. We are going to add in a debit of $875, and that's going to bring us to $5,375 in our debit. For salaries expense, started with nothing, but we did have an adjustment of $80 debit. So we're going to just bring that over, $80 debit in our adjusted trial balance. Utilities expense, we started with $180. We had no adjustments, so it remains $180. Depreciation expense on the van. So depreciation expense, we started with none for both items, but then we did have some adjustments. So for the van, we had a $750 depreciation expense, bless you, adjustment debit. So we're going to bring that over in the debit column for adjusted trial balance. Same thing with the depreciation expense for equipment, bring that over. And so when we add up all of our adjustments total to $3,160 for debits and credits. And then on our adjusted trial balance, when we add everything on our adjusted trial balance, it will also equal, and it equals the $64,380. So when you double click here, it shows we're pulling in all of this information, all these numbers. We're pulling in all of these numbers. So all of our debits equal all of our credits, and it shows down here the sum is $64,380 in the bottom right. Same for that side. So our debits and credits total on our adjusted trial balance. So we're good so far. So the next step is to bring everything over to the proper statements. So we're going to bring over our balance sheet accounts. I just did a control equals a formula, but you can do this however you want. You can copy and paste. So if we did that, we would just copy all the way down and then paste this over. And then copy all of your income statement accounts and paste them over. And so looking at our income statement, we have our revenue of $23,355. And then we have our expense. It's like pouring down. I really hope I rolled all my windows up. It's been doing that for a while. For our expenses total to $10,485. So I totaled out our expenses down here, and this is similar to what you're going to do on the assessment. So you've got this little area, you're going to total out your expenses, which also shows, let me go back to an income statement really quickly. Just need to start tabbing these out. Income statement example. I have sticky notes for everything, but not these. Come on. I know it's in chapter 2. It's probably easier to just pull it up on your PowerPoint real quick. Here. But I'm going to continue talking. Well, nope. Okay. Balance sheet. So it should be. If anyone else finds the income statement first, please let us know. I know it's in here. All right, that's the trial balance. Here we go. Okay, income statement, page 80. All right, so when we're looking at the income statement on page 80, you'll notice we took all of our expenses and then we totaled them up. So on page 80, the total for all of the expenses is $5,700. So that's all we're doing here, and you'll do that on your you can do this on your assessment as well. It just makes it a little bit easier for you to add everything up. So we totaled up all of our expenses, which come to $10,485, and so I just placed that right here. And then we have our revenue, which is $23,355. I'm just simply going to bring that down to next to my expenses total column. And then the difference of the revenue, the difference of the revenue and the difference of the total of the expenses. Remember, revenue minus expenses equals net income. That's what your net income or net loss will be. So this is just the difference of the two. The 23 minus the 10 equals the 12. And then once you do that, if you add these two together, it will give you the $23,355, which is the revenue amount as well. So that's how you would get to these numbers here. And then for your balance sheet, you're going to just, again, you're going to copy everything over from your adjusted trial balance for the balance sheet. So we've copied all of that over here. And then with the credit column, you're going to sum all of this up. So you have, so we've added all this together, and it comes to $41,025. For the debit column, you're going to sum all of this up. So all of your debits come to $53,895. And then you're going to bring this over. So for your balance sheet, you're going to bring this over as well, your net income or net loss. And so you're going to have your credits minus your debits, and that's going to give you your income or your loss, your revenues minus your expenses. And so we brought this 12,870 over. And when you add those two together, it gives you the 53,895. And then I just put a check in here to check, because your adjusted trial balance includes all of your income statement and balance sheet accounts, right? All of these are balance sheet and all of these are income. So this total for your adjusted trial balance should equal your income statement plus your balance sheet. That's a way to see if you're also, that's another way for you to see if you're on the right track with filling these out on your assessment. So for example, if I take this 64,380, this is from our adjusted trial balance, and let's say this part was a bit confusing, but I'm pretty sure I got my balance sheet right. So I'm going to say, okay, well, with my balance sheet, I know that the amount is 53,895. So we'll say the balance sheet, we have 53,895. We're very confident on that, but we are not sure what our income statement is because this isn't balancing. We're like, what in the world? There's something going on here, which we ran into earlier because we didn't have this brought down. All you do is you take your adjusted trial balance minus the balance sheet, and that will give you the amount for your income statement, the expenses. And so then that's a check that you can check to see if this is right. If you take your adjusted trial balance, and let's say you're confident in this, that you got this, you know, you're like, okay, I know that I've got my income statement right, but I'm just not sure about the balance sheet. Then you can take the adjusted trial balance minus what you have for your income statement, and this will tell you what this should be for your balance sheet, which is all of your balance sheet credits. So if you're confident in your income statement, you take the adjusted trial balance minus your income statement accounts, will tell you what you should have left for your balance sheet accounts. Because all these are balance sheet accounts. And all of these are income statement accounts. So when you add the balance sheet plus the income statement, you get the adjusted trial balance. So that's how you would do that one. That's on here. If you want to rework it, work through it, you can do that. You can save the spreadsheet and you can delete all of this information out and do it from scratch if you want extra practice, because the answers are on Moodle under Chapter 3, so you can go back to that if you want. But that's how you would do that. I'm going to go back to our file. And we are 46. Does anybody have any questions on that? I felt like that was a good example for us to go through, since it's a worksheet pretty much just like what you're doing in your assessment. So, and it should also help you overall understand all the material that we're covering. But if you have any questions, just let me know. Okay. All right, so we're going to continue then with objective 3.7. So here we are understanding the alternative treatment of recording deferred expenses and deferred revenues. So rather than record the prepayment of an expense as a current asset, we're going to record the prepayment as an expense on the date of payment. So we're going to debit rent expense by $3,000 and we're going to credit cash by $3,000, and we're saying that we paid rent in advance. And this is on page 144. At the end of the period, if any of the expense remains unused, then we adjust some of it into the prepaid asset account. So on December 31st, we're debiting our prepaid rent by $2,000, and we're crediting our rent expense by $2,000, and this is to record prepaid rent. The results are the same as with the traditional approach. And then rather than recording the early cash receipt from the customer as a current liability, we're going to record the cash receipt as a revenue on the date of the receipt, the date that we received it. So we received cash on December 21st. We're going to debit the cash account because we received it. And we're going to credit our service revenue account because we're saying that we've earned it, we're recording it as revenue. And our note is that we collected cash for future services. At the end of the period, an adjustment is made for the portion of revenue that we did not earn. So remember, we just recorded it as earned, but it was not. So a portion of it was not. So at the end of the period, we're going to make an adjustment to show the portion that we did not earn, because if we haven't earned it, we can't say we did. So we're going to debit our service revenue account by $400, and we're going to credit unearned revenue by $400. And this is to record unearned revenue. The results are the same as with the traditional approach. So does anyone have any questions on any of this? No? Okay. I do have, let me see here. Because we have a little bit of time. So let me see. I want us to work through. Well, does anyone have any questions regarding the assessment? I know we've talked about it a lot, but do what?
I said the worksheet really helped.
Okay, good. And again, you can let me know if you have any questions as well. You can email me. Let's see. trying to think. I know we only have a little bit of time, so I want to make sure I give you a good question. Let's see. That one's going to probably take a little longer than what we have. But that's very similar to the worksheet as well. All right, so we'll just, because we have a little bit of time, we'll work on the try it on page 122.
What's the page again?
Page 122. Yes, sir. So for the first one, does anyone have an idea of the first one? So the first one says, number 3, time period concept, and we're matching the accounting terminology to the definition. So B, the time period concept assumes that a business's activities can be sliced into small time segments and that financial statements can be prepared for specific periods. Good job. What about number 4, revenue recognition principle? A. So the revenue recognition principle requires companies to record revenue when it's earned and determines the amount of revenue to be recorded. So that leaves number 5, the matching principle. And the matching principle is letter C, the only one left, right? So the matching principle guides accounting for expenses, ensures that all expenses are recorded when they are incurred during the period, and matches those expenses against the revenues of the period. So good job. Does anyone have any questions about any of this? No? Okay. All right, so then that's going to conclude the class for today. If anyone doesn't have any questions, I think a couple people said they might have some questions. So I told them I could talk with you after class if needed. If you still have questions and still need to talk, I'm here. Other than that, just make sure that you complete your Chapter 3 homework, Chapter 3 quiz. Get through the assessment. You should be able to complete requirements 1, 2, 3. 1, 2, 3, 4, 5, 6. I mean, maybe not the statement of retained earnings yet, but you can complete your balance sheet and your income statement. You should, and not 7 yet, but you should be able to get through quite a bit of these. So work on that. Hopefully we'll have more done. You'll be on the right track next week as well. And I really hope that worksheet does help. You can even use this as a reference. And if you wanted to, don't copy the formulas out of this worksheet because some of the accounts are different. So some of that might be off. But if you want to mirror the formulas that I have, you can do that. That's, completely up to you. But I did have to add a couple of accounts. So the accounts don't match up to what our assessment is. But you can mirror how I came up with these numbers down here if you want. So, and just make sure these have to equal. And remember, the adjusted trial balance minus your income statement equals your balance sheet. So if something's off somewhere, let's say that you, just real quick, and I'm going to let you guys go. But let's say you didn't have that 12,000 right there, and you're looking at this and you're like, okay, I'm off over here and I don't know why. Like, is it 53 or is it 41? All my numbers are here. What's going on? Well, what you can do, I think I did that here. Is that what that is? Yeah. So what you can do is you can create a check or a variance check, which basically you're taking the amount in your adjusted trial balance, subtracting out the income statement balance to give you your difference. So there's that 41,000. So you can create variances. And so now you know that this is correct. So there's something else that was missing. And so if you took the 53,000 minus the 41, I'll put that right here actually so you can see it. So if you took the 53,000 minus the 41, it gives you that 12,000. So then you know, oh yeah, I forgot to bring my net income over from here to there. And so then you'll just bring that over and these should tie out. So, all right, email me if you have any questions. Good luck with everything. I'll see you next Saturday. All that good stuff. No problem. Yes, sir.
See what I missed on chapter 2.
Yes. So,
Well, the worksheet we did. Oh, you can keep it. It's extra. Keep it.
don't save that because that's already in there. Is that? I think it's going to cut off in just a second. Is it on? Okay. It is off. Okay. Remind me. Hold on. Yeah, remind me. Your name.
Oh, Christian.
Christian. Okay. All right. Christian. Okay, just 1 second. Actually, let me just turn this for just a second. And then you said it's the chapter 2 quiz.
I did terrible on that, so I'm like trying to see what I missed. Review, like know what I need to review in the videos.
Okay. Let me get you up. Oh, I was like, what is going on? It's not because I'm still in student view. I was like, he has no grades. This is weird. What's going on here? I didn't want to scare you, but I was in the wrong role. Like, what is going on here? All right, so Let's see. Now I'm going to go back and find you. Christian Garrett.
Mm-hmm.
Okay. And then chapter 2 quiz.
Yes.
Okay. So when you go in, so these are the, this is what that is.
Mm-hmm.
And so,
Wait.
just,
Was that B? I thought it would have been
so this is the correct one
A. Oh, okay. That makes
when they
sense. Okay,
purchased
never
that.
mind. Okay. That's what I've done so long.
And then this is the other one.
Okay, that one makes sense.
So this is only internal.
Oh,
So just remember, like, internal and external users. So internal users are like managers,
Mm-hmm.
and external users, think like creditors, people that are investing in the company or loaning us money.
Yeah.
And the chart of accounts is the numbering system that we number our accounts by.
Yeah, exactly.
So that's internal. Trial balance, we've talked so much about that today,
Yeah.
especially, you know what that is.
Mm-hmm.
Definitely for sure now. That's internal.
Yeah.
And then costing reports, we're looking at the cost of things, so that's internal. The balance sheet is looked at, we're creating it internally, but then investors and creditors are looking at it to see, do we think they're going to be able to pay us back? Do we want to invest in this company? Are we going to make money? So that would be the balance sheet. That was that. So this.
23,000, I think. Yeah. How was the? Oh, they did 37. Okay.
Let's see, what is it? This one? Yeah.
I kind of guessed along. I'm really sure. Because I was thinking that it goes at the end of the accounting period, but it wasn't an answer. So I was like, after the financial statements are prepared, I guess.
So it's in our assessment.
Okay.
So when we're looking at our assessment, this is what they're talking about in that question.
Mm-hmm.
So, okay, good. I was like, wait, I gotta make sure this is the right one. So they're saying, when is a trial balance usually prepared? So this is our unadjusted trial balance. So you just have to find, well, where's the trial balance? It's here.
Mm-hmm.
The trial balance is prepared before our income
Yeah,
statements.
okay.
So before our financial statements. So it's before the financial statements are prepared, not after. At the beginning of the period, no, because if we look at our assessment, this was the beginning of the period. This is
Yeah.
everything that happened in the period,
Mm-hmm.
and this is happening afterwards. I think we only have one more. And then, so that's that. And then I think we have this one, right? Yeah. So, sorry. So the question is here.
Mhm.
So here we're trying to figure out, well, we have this journal entry of $290 to purchase office supplies. It was erroneously or misrecorded as a debit to office supplies for $600 and a credit to cash for $290. Which of the following statements correctly states the effect of the error on the trial balance? So the sum of the debits will exceed the sum of the credits by $310 because, so the sum of the debits will exceed, yeah. So that's that one. And I think I sent y'all a video this morning because of a question that I was asked yesterday, last night or something. But I did pull up a video, and I think in the video it talks about, well, it does talk about like trial balance errors and identifying them. And you could, so this, it can help with that as well. So you probably weren't the only one that had something, yeah, to do with that. So, but yeah, that's all of them.
Okay. That makes sense.
Did you do the homework before you did the quiz?
Yeah, and I was actually
Okay.
doing pretty well on the homework, and then I was just like,
Yeah, just do the homework before you do the quiz and work on the assessment.
okay.
Because some of this could have came from, just working on the assessment and being familiar with how the worksheet looked on the assessment. But yeah, do the homework first and maybe do it 2 times.
Yeah.
If there was anything that you were kind of questionable about, and then work on the assessment or review the slides, PowerPoint slides. I mean, these are open book. You're doing it at home. You're not here. So I mean, I'm sure you're probably looking at books and PowerPoints and stuff like that. So, I mean, just look it up on the PowerPoint if you have a question. And this is it's only 10 questions.
Yeah.
So it's not, I think you have an hour.
Like 2 hours. Yeah.
2 hours. Oh yeah. So you don't have to fly through it. I mean, you have time to read the question and then just sit and figure out, okay, wait, let me look this up real quick. Yeah, that's probably it. Because when you're looking it up, that's going to help you remember it when you get to the quiz and the midterm, which is coming up. So
Okay. Thank you.
It's coming up. It's going to be here before you know it.
Yeah.
No problem. Thank you.
Yep.
Yes, ma'am.
I know with some of the classes there are ways that you can submit your work before submitting it to the teacher to have like a student tutor or a teacher tutor like review your work and go with you like here's the mistake before you submit it. Usually it's on Starfish. Is there anything like that for accounting, or is it more like English type classes specific?
I think not for accounting that I know of. We do use Starfish, but we use Starfish to like report if students are absent a lot or if they're not doing their work and stuff like that. I know they were looking for an accounting tutor, but I don't know if they actually found anybody because no one's told me if they did. But if you do the homework, you can do the homework as many times as you want. So if you do the homework first, and then, and I believe it tells you what you got wrong, and it also tells you the answers. But if you do the homework first and do it, like I said, Tim, like 1 or 2 times, just to kind of help you understand it better. The assessment, the quizzes are open book, open notes, so you can use your PowerPoints as well for the quizzes.
Okay.
If you have questions, you can email me, but I would save the quiz for last because you can't do it again. Like it's a one-time. So I would do the homework, maybe do it once or twice, and work on the assessment, the requirements in the assessment that are due. And then after that, then go to the quiz because the assessment is really what's going to help y'all. That's what kind of why we keep spending a lot of time on it. The assessment is what's really going to help you to just understand everything and pull it all together.
Yeah, like all the words to me is just, I'm like,
Yeah.
okay. With math related, I need to like
See it, do it.
physically do it and be like, oh wait, no, this one has to be here. That's why, and like over and over and over again.
Yes, ma'am.
But okay. All right. Well,
Yeah.
thank you. I just wanted to know. I
No
appreciate
problem. And I'll ask and see if there is an accounting tutor. I need a sticky note. But I will check. I'll see if there's an accounting tutor that they found. But yeah, you can email me too. So you just can't email me about your quiz. So that's why I'm like, do the homework first. If you have questions on that, you can email. Work on the assessment. If you have questions on that, you can email. And then just save the quiz for last. Just make sure you have it done before our next class period.
All right.
Thank you. Have a
No
good
problem.
weekend.
Have a good week.